All right, good morning, everyone. It is 9:15 on the morning of September 19th, 2022, and this is my pre-market strategy session. The title of today's video is the buyback lockout period. So, prior to the start of earnings season, companies on the markets are prohibited from buying back their stock. This is some kind of an SEC thing. I don't remember when it was enacted exactly. But essentially, a large portion of purchasing on the stock market right now are companies buying back their own stock. And 30 days prior to an earnings report, a company is not allowed to buy their stock back anymore. And so what we have is somewhat of a deficit of buyers on the market, generally speaking. I'm much more bearish on the Qs than I am on the SPY, although they do look really quite similar right now. The SPY actually contains some companies that are considered defensive during bear markets. The utilities and energy and consumer staples. Whereas the Qs do not contain any energy staples or utilities. So we got pretty much almost. So this isn't the gap here. This is the dailies on the Qs, and so on Friday, the Qs attempted to come up and fill the gap. Now the gap is at the close, although it looks like it did come down to the bottom of the candle, the wick here on Friday. It came up, touched it, and closed below it. Let's see if you can see that. If you're looking at this on a small, like a phone or something, there's a wick on the bottom of this red candle right here. Now, to actually technically close the gap, the price needed to come up to 291.10 right here, and then fade away. If it had done that on Friday, that would have been really nice. Today would be absolutely and totally completely, it would be easy, a really easy call to say, it's bearish, it's going down. I don't know with today, generally speaking, the correct direction to be in right now on trades is to the downside. The probability that you are going to be profitable to the downside is greater than if you're going to try and trade to the long side, to the upside. So, looking for short opportunities is the way to go. Those short opportunities can be kind of elusive. The entries can be somewhat elusive in periods like this when the indicators are somewhat discombobulated. It did get into overbought at the end of the day on Friday there. So it would have been a good time to sell. I wasn't paying attention to the market at the close on Friday. I was doing something else. I don't remember what. Usually, until October rolls around, I usually don't trade the afternoon session. I usually, during the summertime period, which is roughly, the beginning of June to the end of September, I only trade the morning session. I don't stick around for the afternoon session. So, starting here pretty soon, just a matter of a few days, I'll sit and sit through both the morning and afternoon sessions. But for right now, I'm just trading the morning session. So things went into slightly into overbought on the short-term metrics there, actually into the close and then into the after hours on Friday. If the Qs opened up right now, it would open up 0.89% lower. The VIX is elevated, definitely. It's real close to the top end of its range. Top end of its range is probably a little bit higher, closer to around 30 today. It was at 28.67 on Friday. Then we have the 10s and 2s spread here, and it's going deeper. This is something that I usually point out pretty much every time I pull this chart up, is that the yield curve can stay inverted for a considerable amount of time until we see the really dramatic downturn on the broader markets. And so the examples that I have here, here's the Here's the 10-year, 2-year yield inversion. The pink line is the 0 line. And here it is inverted in the late 80s, early 90s. Here it is for prior to 2001, and here it is prior to 2008. And the blue line marks roughly the high of the markets and the subsequent down move in the stock market happens when the yield curve normalizes. Here you can see this. Every single one of these green areas right here is the yield curve, the 10 and 2 spread normalizing, and at the same time the stock market crashing, really crashing. So here we are in this time period, and let's look at it in a matter of months here. So back here in 2007, the yield curve was inverted roughly for about a year, maybe 18 months. Maybe I think it was. Well, let's just count. Yeah, this one was roughly 18. There's roughly an 18-month yield curve inversion back here in 2001, and then back here, in 2007. Then back here in 2001, it was inverted for roughly a year, 12 months. And back here in 89 into 90, it was inverted for a short amount of time, about 6 months, and then danced along the inversion line here for about another year. So it can really take quite some time. We can be in this inverted situation for a considerable amount of time before it starts to normalize again. So although I am bearish, I do expect lower prices to come in. We may not see the real crash, the real swift down moves, panicky, blood on the streets down moves for, I mean, we're only really, so it inverted back here in March, and here we are 1, 2, 3, 4, 5, 6 months into this inversion. You can kind of call it 6 months. You could also actually only call it 4 months, 1, 2, 3, 4, since June of 01. I'm going to call it 6 months just to kind of, I don't know, be ahead of the game maybe. You know, timing's everything. So who knows? But this condition could continue for a substantial amount of time until it starts to normalize again, and that's when we'll see the real crash. So negative 699 points is sort of as far back as this chart will go, is somewhat the record low on the inversion, and that happened back in the 2001 time frame. Yeah, I mean, we could be another 6 to 12 months away from this curve normalizing and actually seeing a major swift and scary downturn in the market. But it's on the horizon. It's it's coming. It's going to happen. So yeah, looks like we're going to probably open up into oversold conditions today. I'll wait probably 20, 30 minutes until after the open to see how things are shaping up. If I can get overbought conditions today in the Qs that coincide with the VIX going into oversold conditions, then I'll be entering into a short position on the Qs for a trade. All right, everybody. That's pretty much it today. I got in kind of late last night from a trip to taking my oldest son to visit his grandparents and getting him into school this morning. He got poison ivy, which is great. He's, I live in the city, but I get him out into the country and he just turns straight into a country boy. It's the best thing. But a little bit of a slow morning this morning, so I'm going to wrap it up there. Good luck out there. Keep your wrists tight. Click like, share, subscribe, leave a comment, tap the bell, and I'll see you at tomorrow morning's strategy session. I am out.